Stock market loves rate cuts. And are we going to get one in the middle of June when the Federal Reserve Committee meets to make the decision and releases the dot plot? Find out in today's video. What's up, everybody? Jeremy Hritz here. Courage pays better than fear trading, with part one of my video series getting into the Federal Reserve meeting that's taking place here in June. It's super important, and that's why I'm covering it 3 times to prepare you, to educate you, to let you know typically what happens leading up to the meeting, what typically happens when rates are cut, and what it means for your trading and investing. We're also going to take a look at what happened when the Fed cut in the fall and winter of this past year to see what happened so that you can use that to your advantage in your trading. And I'm also going to give you 3 key things to watch leading up to the Fed's decision so that you are prepared for what is to come. Fed's next meeting is June 17th and the 18th of 2025, and it's a big one. Why? Because the Federal Reserve is releasing their dot plot, a chart showing each Fed official's projection for interest rates. Right now, the federal funds rate is at 4.25% to 4.5%, where it's been since the last cut in December of 2024. But markets are buzzing with speculation about more rate cuts, and one that may in fact come this month in June. The market is expecting 2 quarter-point cuts by the end of 2025. That would bring the rates down to about 3.75% to 4%. But here's the thing. The Fed just doesn't cut rates out of the blue. There's a buildup. Weeks of economic data, Fed speeches, and market reactions that set the stage. And with inflation still above the Fed's 2% target, last reported at 2.6% in March, and unemployment near 4.2%, the Fed is walking a tightrope. Add in things like tariff noise, increasing unemployment as mentioned by Fed Governor Waller in his comments, and you could see why markets are on edge for this meeting. What typically happens in the weeks leading up to a rate decision meeting? First, economic data will take center stage. The Fed looks at inflation, jobs, GDP growth to decide if the economy needs a boost. Leading up to a rate cut, you'll often see mixed signals and market uncertainty. Right now, core PCE inflation is at 2.6%, above the Fed's goal of 2%. Some economists think that it'll cool off soon, which leads to optimism for a rate cut this month. Second, Fed speakers start dropping hits. We'll hear from folks like Jerome Powell, who just spoke on Monday at 1 p.m., or Governor Waller, who said tariffs might push unemployment up, paving the way for rate cuts later this year. These speeches often move the markets. For example, back in April, Jerome Powell's comments on supply chains sent the SPY up 3%. And traders hang on every word from Powell and the Fed governors. And as a result, it moves the markets. And third, markets get volatile. When rate cuts are expected, you'll see the short-term Treasury yields dip. Some sectors like tech may rally because of cheaper borrowing costs. And let's take a step back and look at what happened with the 2024 rate cuts and how that impacted the market. First, the fall 2024 rate cut. On September 18th of this past year, the Fed cut rates by 50 basis points, and it brought the federal funds rate from 4.75% to 5% down to 4.25% to 4.75%. What led to this? Inflation was cooling. Core PCE was trending toward 2%, and the labor market was softening. Unemployment at 4.1%. The Fed started to have growing confidence in inflation progress, but there was debate. Fed Governor Mickey Bowman dissented, preferring a smaller 25-point basis cut, the first governor dissent since 2005, and markets were mixed leading up to the cut. Tech stocks like Nvidia rallied on hopes of cheaper borrowing, but financials lagged. After the cut, the S&P 500 initially spiked 1.5% as investors cheered the Fed's move, but volatility followed as some worried that the cut signaled a slowing economy. What about the December cut? Since you asked, then came the December 2024 cut, and on December 18th, the Fed cut rates again, this time by 25 basis points, bringing the range to 4.25% to 4.5%, where it stands today. Inflation was still above 2%, around 2.5%, but the economy was cooling, with GDP growth slowing to 2.8% in Q3. The dot plot in December showed the Fed expected only 2 more cuts in 2025, which surprised markets. They were hoping for more. And what happened after that? Markets plunged. The S&P 500 dropped 3% the next day as investors worried about persistent inflation and a hawkish Fed. Mortgage rates also rose, jumping 100 basis points over the next 3 months. And as a lot of people pointed out, the Fed really has limited control over long-term rates, and their power really is only over the short-term rates. Rate cuts don't always mean a smooth ride. Markets can overreact, and sectors respond differently. Tech might rally, but if the Fed signals fewer cuts, like it did in December, expect a pullback. Let's talk about what this means for your trading in June of 2025. Based on what we saw in 2024, here are 3 key things to watch. Stay until the end of the third one because it's a game changer. So we have key economic reports. In the next 2 weeks, watch for CPI, Consumer Price Index, and the PPI, Producer Price Index, and retail sales data. If inflation cools further or unemployment ticks up, we'll get that on Friday, like Waller suggested with tariffs, markets will price in a higher chance of a rate cut, and stocks could rally just like tech did in September of 2024. And also pay attention to Fed speak and market sentiment, and pay attention to what other Fed members are saying. If he or other Fed members sound dovish in the coming weeks, hinting at cuts, you might see a market bounce. But if they're hawkish, like in December, expect selling pressure. And track the S&P 500 and sectors like tech for clues. Here's the third thing. Don't go anywhere. I'm about to share the biggest thing to watch before the Fed's decision, and it could save your portfolio. Third, and most important, the dot plot expectations. The dot plot is the Fed's crystal ball. It shows where they think rates are headed. Now, it suggests rates could fall to 3.75 to 4% by year end. But if the June dot plot shows more cuts or sooner, markets could go wild like they did after the September 2024 cut. The lead up, watch how traders and investors are positioned. Are they betting on 2 more cuts the market expects or more? Use tools like the CME FedWatch to track probabilities. It's a goldmine for traders. That's it for part 1. Next week, I'm going to break down the Fed's latest signals and how to position your trades before the June 17th meeting. Don't miss it. Subscribe now and hit the bell so you get notifications when that video is released. We are just days away from the June 18th Fed rate decision, the new dot plot, and the Jerome Powell press conference. What is it going to mean for the markets? Find out in part 2 of my Fed rate decision video series. Check it out. What's going on, everybody? Jeremy Hritz, Courage Pays Better Than Fear Trading, here with you, part 2 of my Fed rate decision series, getting you prepared for this June 18th meeting. It's creeping up on us. I'll have one more video part of this series. But today I wanted to talk about the recent data that's come out in the economy, specifically CPI and PPI that were freshly released this Wednesday and Thursday, what they mean in terms of potential rate cuts. When are the rate cuts being projected? Is it June 18th? I'm going to get into all of that and more because as traders and investors, we have to know what is happening with the Fed. So again, June 18th is the date of the meeting, and the way this will play out is at 2 p.m. we're going to get the rate decision in terms of what the Fed has decided to do with the interest rates. And as of right now, market makers are not pricing in a rate cut for the June meeting. You could see that the first cut is really not anticipated until September, though we've seen an increase for a chance of a cut in July off of inflation data, which we'll talk about here in a second. And then we're also going to get at 2 p.m. on the 18th, we're going to get the dot plot, which is going to show the projection of rates for the rest of 2025 into next year. And so that's important because it shows the path of monetary policy. And just going back to December, whenever the number of rate cuts that were projected in 2025 were cut by the Fed, that caused a massive sell-off in the market. So that's why it is so important. And then following that, we get Jerome Powell, the Federal Reserve Chair, who's going to speak at 2:30. I'll be live streaming that. Hopefully you can join me. The link is on my channel. And what we want to pay attention to when Powell is speaking is what his tone is. Is he hawkish, meaning is he bearish on the future of the economy, which is going to put pressure on stocks, or is he dovish? Is he bullish on things? Does he see the economy being in a good state? Does he see the opportunity for rate cuts, but not rate cuts that are needed to save the economy, but almost like a Goldilocks scenario where everything is functioning perfectly? So those are the things we want to watch for on the 18th. And so a lot of things have happened over the last week since I did my last video. And I just want to update you. We did get some important data in relation to the economy, and the first being CPI, the Consumer Price Index. And we actually saw that come in lower. So the inflation rate year over year, the forecast was 2.5%. It actually came in a tick cooler at 2.4%. And then the inflation rate month over month, it was forecasted to come in at 0.2%. It came in at 0.1, so a tick lower. And then when we look at the core inflation rate month over month, it was forecasted at 0.3. It came in at 0.1. Inflation was less than expected, cooler than expected. And when that information was released at 8:30 a.m., you did see an initial spike in the market, but then that sold off over time. Now, whether that was a result of lackluster optimism or enthusiasm about the trade deal with China and the US, we don't know, or maybe it was taking risk off the table for PPI. It just wasn't the massive move that typically you'll sometimes see with positive inflation reports that we've seen in the past. So we got the CPI data. And then Thursday, today, when I'm recording this, we got PPI, the Producer Price Index. And just going through that data with you, PPI month over month was forecasted at 0.2%. It came in at 0.1. Again, a tick lower. Core PPI month over month, it was expected to come in at 0.3. It actually came in at 0.1. So again, lower than what was expected. Stocks are moving higher. The SPX up 18 points at the time that I'm recording this. So the data that has come in from an inflation perspective shows that inflation is continuing to slow down. Now, where the uncertainty exists is whether or not the tariffs that are being implemented are going to cause a spike in inflation, and whether or not that inflation will endure and stick around, or whether or not it will be transitory. So that's the one thing the Fed is uncertain about. But what we've seen as a result of this data, again, we did see a tick up in the probabilities that we could see a rate cut in July. Ultimately, what market makers are seeing is that first rate cut of 2025 coming in September, and then the next one being followed up in December. So the next thing I wanted to share with you and provide an update is about what Fed speakers have been saying, what Jerome Powell has been saying. And here's a rundown of some of the most recent information. We did get the minutes from the Fed meeting from May 28th, and those notes were neutral to hawkish. And again, it just emphasized the Fed being data dependent in terms of making their decision. And that means that until they have data from inflation, the labor market that supports rate cuts, that they're going to hold steady. And they feel that they have the luxury to do that because the rates aren't too restrictive. They're not overly restrictive. And so they're waiting. And what they want to see is if the labor market does weaken, if it loses steam, then they could be in a place where they can cut. And if inflation continues to drop, then they could be in a place where they could cut. And ultimately, if that labor market is falling a bit, or if the economy starts slowing down, that points to weakness. And again, that could be another reason to cut. But ultimately, when we talk about the inflation component, what really is going to be important is the impact of tariffs. We just don't know yet what that's going to be. So that tariff uncertainty is something that continues to come up, not just from Jerome Powell when he talks. He actually spoke on June 4th and mentioned the uncertainty surrounding tariffs, continued to emphasize the importance of being data dependent in their decisions. There's nothing new there. And so that's really going to be the big story in terms of what happens with tariffs and the impact on inflation. But again, just some other notes from Powell speaking on June 4th. He talked about how the labor market is solid and that there's no rush for cuts, and that he believes that longer term expectations for inflation are well anchored, meaning that despite some spikes that could come in inflation due to tariffs, he thinks that that will eventually come to 2% and stay there and will be anchored there. So that's something that is positive in terms of what his longer term expectation is for inflation. However, he did point out the uncertainty related to tariffs and that they have to wait and see what's going to happen with that. And we'd be remiss not to talk about President Trump and what his thoughts are in terms of the Fed and rate cuts and Jerome Powell. And he has posted several times, once this week after CPI came out, that Jerome Powell needs to cut rates now. So Trump wants rates cut right now. And this is a concept that's been talked about quite a bit, is the whole concept of a shadow Fed chair. And you might be asking, well, what in the world is a shadow Fed chair? Basically, keep this in mind. Powell is done with his term in the springtime of 2026. I believe it's May of 2026. And so he will have to be replaced. So there is speculation that Trump could say, all right, hey, this is my guy who will be appointed to take over for Powell whenever he is done with his spot. And what that ultimately would create is a lame duck Fed chair, Jerome Powell, and this other guy waiting in the wings who would take over, then would begin to have influence over the economy and over the markets based on their speech, what they say. And some people have even said that they could have shadow Fed meetings where they're meeting and discussing economic policy and giving insights in terms of what's going to happen when this person would take Powell's place. If Trump does name somebody who will take over for Powell in May of 2026, and one of the names that has come up, it's former Fed Governor Kevin Warsh as potentially being the successor to Powell. And so let's see if that's something that happens over the next few months. I doubt before the next Fed announcement here on the 18th, but maybe before the July meeting, that's possible if Trump doesn't get what he wants in terms of a rate cut. But if a successor is named, what type of impact does that have on the market? And will that person speaking, let's say that it is, will it have an impact on stocks? Will it have an impact on the bond market? Will it have an impact on the economy? We don't know that. But that's an interesting concept and something to pay attention to. So there you have it, an update to prepare you for June 18th, the big day. There's going to be one more video left in this series to just get us ready for this. And what I'm going to do in that video is we're going to spend some time looking at the last two rate decisions, the last two dot plot releases, to see how the market moved from that, just to give us a feel for what potentially can happen. And then I'll also update you with any news that will come out closer to the meeting, either Monday or Tuesday of next week, to just make sure that you're prepared for what is going to be a volatile day in the markets. So what are your thoughts with the new CPI and PPI data that came out this week? Do you think that there is a chance, a surprise chance, that there is a rate cut at the 18th meeting? Do you think maybe it'll happen in July, or do you think that it's September like the market makers think? Let me know in the comments below. Make it a great day, everyone. Take care. We are only 1 day away from the Fed rate decision, the dot plot, the Jerome Powell press conference. And today we're going to take a look at what happened the last two times the dot plot was released and what the move in the market was. All of that in part 3, the final video preparing you for the Fed meeting this week. Check it out. All right, so let's take a look at what happened the last 2 times we got the dot plot released. Again, the dot plot showing the expectations for rate cuts from the Fed. And we're going to start by looking at the December 18th, 2024 dot plot. And you can see this big old fatty of a candle right here. This is one hell of a move. I'm going to measure this from its upper wick to its lower wick just to show you the range here. And we're looking at 203.32 points. That was a 3.35% move. And you may be wondering, well, what in the world happened here on this date in terms of the dot plot? And I'm going to share the data here with you. I pulled it up. But it said that the outlook on rates that was shared here on the 18th, the Fed officials projected accumulated 50 basis points of rate cuts in 2025, then another 50 bips in 2026, and 25 bips in 2027 basis points, bringing the terminal rate to 3.125% by the end of 2027. And so looking at that, the market reaction, there were 34 basis points of projected cuts versus 48 basis points of projected cuts previously. So that decrease in the number of cuts that were projected spooked markets. And then what we saw is this big old behemoth here on the screen. And let's actually go into the hourly chart to take it. See that we were in an uptrend. We were pushing up. We were up near, these were all-time highs for the time. And then you could see we started to make lower highs. Okay. And then coming into the 18th, here's the 18th right here. You could see that the market did push up a little bit. And then you could see it started to sell down around 12:30. And then here at 1:30 p.m., this is the candle where the news broke and came in. And that's where the decrease in rate cuts, the rate projections were cut. This is where the dot plot was released, and bang, you could see what happened. 3 big, massive red candles on the hourly, and this bottomed really not the day after, but the day after that, and then it started to push out of there, recovered a little bit, but then started to drop. But that spooked the market. And you saw that subsequent drop, and potentially if we see something like that on Wednesday, if the Fed decreases the number of rate cuts that they're anticipating in 2025 and then in 26 and 27, we could see a similar type of reaction. So be prepared, be ready. And I would advise that if you're in a day trade heading into this 2 p.m. time frame when the dot plot is released, make sure you close it or make sure that you move your stop into an area where you are protected, because you could get a very massive volatile move. So that's the December 18th move. Next move we want to look at is going to be in March, and this was March 19th, 2025. We were already in a bit of a downtrend at that point in time. So right here, so we did have a little bit of a green day. And again, we were in that downtrend. We had the tariff news that came out. At that point, we got a little bit of a bounce that came in, pushed back up higher, but this was the 19th. So it was a little bit of a move. We see that upper wick here, and let's drill down and go into the hourly. All right, so here is March 19th right here. So you could see 12:30, 1:30, and then here is whenever we got those dot plot projections. And let me just share with you the information that was released in that 2025 dot plot summary. And again, the rate outlook at that point, the median projection was 225 basis point rate cuts in 2025, another 50 basis points cut in 26, and a quarter basis points cut in 27. So it was identical to the information shared in December. And so you saw a bit of a pop here. It jumped up to 57.14. But it didn't hold that strength there. So if we measure this, how far it ran up, and it wasn't a lot, 35 points, but it gave it all back. A few days later, we did gap up before we started that ultimate sell down there. into the April lows. But what stood out here from the March release of the dot plot is that there was less consensus amongst the Fed members about the number of projected cuts. So in this instance, there wasn't an increase of the number of projected cuts. There wasn't a decrease. They held it steady. And so there was a little bit of optimism that came from that. You saw that little bit of pop, you saw that upper wick, but you could see that that didn't hold and it just kind of moved sideways and sold down the next day, sold down the day after, and then we had a gap up going from Friday into Monday before really getting that ultimate weakness that sent the entire market down. So that's what happened the last two times. December, a decrease in the number of projected rate cuts. March, they held it steady. In December, it sold off hard. In March, it popped a little bit, but then came back down to earth. And so what will we get here on Wednesday? Will it be decreasing in the number of cuts because of uncertainty related to tariffs? Or will that uncertainty cause them to just hang tight again? Or do they see weakening in the economy and the need to be proactive? And do they see the need for more rate cuts? And if that is the case, how will the market react in that situation? Will it be a push higher? Will it be a sell-off? We don't know, but at least we have something to guide our decision making based off what has happened the last few times the dot plot was released.
So there you have it. You are now prepared. Go, my son, my daughter, into the Fed rate decision, into the release of the dot plot, into Papa Powell giving his speech and his comments. You are prepared. You know what to expect. You know what to anticipate. And let me know below, what do you think is going to happen? Are they going to dial back the number of rate cuts that they're anticipating? Are they going to say that there's more rate cuts? What's going to be the move in the market? Remember, we're going to be live streaming 2:30 on Wednesday, the Powell presser. So join me, let's chat, and I'll see you here on the next video. Make it a great day, everyone.